please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, let's focus on the fundamentals of the market. We have Rahul Arora of Nirmal Bang joining in to discuss a couple of stocks as well as market levels. Rahul, hi. Thanks very much for joining in. We've spoken about pharmaceuticals quite a bit. It's been a strong rally that we've seen since the past 2 weeks. Specifically, do you think that there's more to go from current levels? Because these stocks are still, say, on an average 15% away from their 52-week highs.
That's right, Ekta. I think the damage has been so much in terms of price erosion, and I don't mean in terms of the product price erosion, I mean in terms of the stock price erosion as well, because one references the other. My mind goes back to when we initiated on Dr. Reddy's. I mean, if you take my initiation price to where it is today, the call is still going wrong. So even though it's seen a bit of a rally, but I think, with the good news flow coming through on Sun Pharma, Dr. Reddy's over the last couple of days, Lupin has had a couple of launches. We recently met Cipla. They were actually quite hopeful on the launches. So I think, the entire sector pre this short-term rally you have seen was coming to you anywhere between 12 to 14, 15 times FY20 earnings because people had built in a lot of the launches coming through in the second half of 19 and 20. So the EPS growth was very substantial, which got the price to earnings down. We're still believers in Dr. Reddy's. So even with this Suboxone approval, my analyst believes the other players in the fray will probably not launch, as you were just informing me that Mylan has got an approval. But even then, I think $80 million is what we're expecting in incremental earnings for Dr. Reddy's this year. Aurobindo is another interesting one that we like. I think if you see the number of drugs that are going off patent for Sandoz, I think the overlap it has with Aurobindo is quite substantial. I think that could be a very big beneficiary. And I think finally on the respiratory side, we got some comfort after meeting Cipla very recently that things might be in order. So I think it is not a bad idea to remain overweight on pharma because, the drug prices had come down to very abysmally low levels. In some cases, on some products, they were actually very close to the Jan Aushadhi prices. So when we speak to pharma players, they said that the downs... yes, absolutely. So, and we've actually put out a report to that effect. So they felt that, incrementally, the price erosion will not be much. So I think there is a process of bottom formation. It'll still test. I mean, I think people who would have bought after our initiation are still losing money. So I can't pick up the phone and tell someone, hey, Dr. Reddy's is rising. But I think if you are someone who's borne the brunt of it, don't sell these stocks now. I think it's just a process of bottom formation. I think leg 2 of Pharma 2.0 in India is probably just about starting is my sense.
That's that kind of assumes that what we saw was essentially more cyclical rather than structural. Whereas there are those who very strongly believe that the US generic market as we know it is, basically toast. In terms of, there will be growth, but margins will continue to get depressed year after year after year. High single digits, 8-9%, depending on who you talk to. How do you take into account that with vis-a-vis stock prices? Well, there is under ownership and maybe attractiveness generally. You leave those characteristics aside, just growth, Rahul, for the sector and how much more stocks can do from here?
So I think it's a very interesting point you raised because the latter is a more of a technical issue in terms of ownership. But I think if you look at cyclical versus structural, I don't think at any point in time the US FDA has said that we don't want to do business with Indian generic manufacturers. If you look at...
No, the problem now seems to be quite the opposite. Now new rules say that they're going to clear products and approvals are going to come within 12 months.
There is a reason for that. And that is because $20 billion worth of generics go off patent in the United States by FY20. So unless you don't want those medicines available at a Walgreens or other outlets.
But it also means many more guys for the same product, right?
Which is why you need to find overlaps with companies that are in very similar product lines in the US, which is what I was referring to in the case of Sandoz and Aurobindo, and find those overlaps where those spaces will be vacated by the larger players like the Mylans and the activists of the world, and where Indian companies will come in and benefit. And I think the maximum overlap that we see with the number of drugs that are going off patent is Dr. Reddy's and Aurobindo Pharma.
I just want to point out that, Teva had also mentioned in their Q4 numbers this time round that they're exiting some of the drugs that they find too fiercely competitive.
Are they talking about exiting like the US generic market and only focusing on specialty?
So,
in
for
fact,
example, if there
it's
are
almost 1/3 of their product profile that they're exiting. So that is the extent of the opportunity of Teva that comes up for grabs. So I totally buy your...
Can you look at it in another point of view and say, well, if Teva can't do it, I mean, are we really saying that some of the other guys will be able to? I mean,
no,
fight
Teva
and compete?
is doing it because the pricing doesn't make sense for them.
Exactly.
I don't think the Indian guys have that issue because our prices have already eroded, like I was saying, to abysmal levels. And it's not like Indian manufacturers have not sold at a discount to... I mean, Natco is a classic case. One of their drugs, one of the biggest blockbuster drugs, was selling at a fraction of a cost of what was being sold in the United States.
So cost of production still is a huge
I think so. And I think barring Aurobindo, which is just at about 3.5–4% of sales in terms of R&D, I think the Indian companies, by and large, are between 8 and 12%. So I think a lot of these ANDAs that have been filed... I think if you just put it into perspective, a lot of the earnings that are being projected for FY19, had these issues not happened, which is, pricing of caps in India itself, where you went after generics, and then, of course, the US FDA issues, about 70–75% of these earnings might actually have come through in FY17, not even 18. That is the extent of the last 2 years' damage that's actually happened. So it's a reversion to mean, and then you're talking about incremental growth. And then comes the very important point that you raised about institutional ownership, and which is what we saw in the case of HUL versus ITC, for example. People were massively overweight on ITC, and then the sudden rally that you saw 40% in HUL because the numbers were far better. So that's the technical factor that will go into playing on this entire bottom formation process that I was talking about. Therefore, in the pecking order of what we have just discussed, I would probably place Dr. Reddy's at number 1, probably an Aurobindo at number 2, and Cipla at number 3 in our order of large cap pecking order in pharma.
And I just want to mention that a lot of the companies, it depends on your portfolio entirely in the US. Like Taro has a dermatology portfolio, much more competition than, say, Cadila, which is saying that they're not expecting that much price pressure. Taro is saying they are expecting price pressure. It depends entirely on your portfolio and other people entering the market. But Rahul, before we let you go, the urban consumption theme, we have the World Cup which is on. Just add in which team you're supporting and tell us how big an opportunity FY19 with all these little incremental anecdotal triggers are for, say, a Jubilant FoodWorks.
Well, I don't know if they've officially tied up with FIFA per se, so I don't know, because I know that...
We're assuming people are going to eat a lot of pizzas while watching those matches.
It's possible because, the timing works just right for us, and, of course, you have the big one kicking off with Portugal and Spain tonight. But I just think seeing the game last night, I think this is probably the first time in 30 years Russia will probably make it to the round of 32, given the way they just hammered Saudi Arabia yesterday and 2 of those goals coming in extra time. But my sense is there's too much riding. I mean, let's go with one of our developing country peers, and I'd probably say Brazil this time around. Let's see how it goes. But specifically on Jubilant FoodWorks, it's just been a dream run for that stock. I don't know how many $3 billion market cap stocks have gone up 200% in a year. Our price target is about 18–20% higher from here. It's a very liquid name. It's an F&O name. But I think a lot of the base effect will kick in as the second half of the year wears out. So I think even if you discount 2–3 years out, I probably don't see the stock giving you more than 25% from here. So if that's the kind of return you want to play for, which is not bad, it'll still beat you an FD return by more than 4x. I think you could still look at it. But I think we're probably nearing the last leg of this incremental rally that we've seen in Jubilant FoodWorks.
Rahul, it's a pleasure. Thank you very much for joining in and taking us through pharma, a bit more detail, and of course the call on Jubilant. We take a very quick break here. We come back and we talk about a smaller sector which when is up as a sector. Tea, what's going on? Are prices really looking very good? We have the management of Jayashree Tea join us in just a bit. Back in 2. Welcome back. Tea is the sector which is, a sector which as a whole is doing well. I mean, that's always the case. It's not ever one stock which does well, but the entire space. We've got Mr. D.P. Maheshwari, Managing Director and CEO of Jayashree Tea, join us. Mr. Maheshwari, thanks for joining in. I mean, if prices, are we seeing the first flush now, or are we already on the second flush? I mean, and what are prices like right now?
Sir, prices in second class, wherever there is good quality, prices are rewarding. Quite good. Quite good. And as I told you, last 3-4 years, the market has now formed a pattern. Good quality is being rewarded, and wherever quality is common medium, there is problem. In the sense that their prices are low. And as you see, last year, you see India's production, it was a record 1,355 million kilogram, 55 million kilogram more than last year. And in that, the small grower sector grew at a exceptional increase of 90 million kilogram, and organized gardens were down by 35 million kilogram. So common medium teas are plenty, and good quality teas are in short supply. That is the scenario.
So when you said prices are quite good for quality, could you give us on an average where are prices right now? I mean, for a garden that, for example, that you would operate, where are prices? Yeah.
I'll tell you, see, the prices, depending on which area the tea belongs to, high quality Assam, it is now selling between 300 to 350. Some really good gardens. Balance all are selling between 250 to 300. And if you see dwarfs, good quality dwarfs are selling 250, 270, 280. But these are all second plus prices. For the year, of course, the average will come down. But at the moment, I think prices are quite satisfactory, for quality especially.
Okay. Mr. Maheshwari, if we could just discuss your numbers now. Your margins were quite disappointing for the entire fiscal. You just about broke even on the EBITDA level. Are you more confident, say, about FY19 based on your price outlook as well?
Ma'am, what you say is very correct. The industry is really passing through a challenging period. And most of the balance sheet you see from plantation company are, not encouraging. In fact, breaking even or even some red. The thing is, last 4 years, the tea prices have not increased in general. And cost, as you know, has gone galloping up by at least 50, 60 rupees a kilo. Even now, we are now waiting for the wage increase in Assam. Bengal has announced the interim increase of 17 rupees 50 paisa plus 9 rupees towards ration. And in Assam, we are expecting the negotiations are going on. So that would mean further increase of cost. So cost increase is tremendous and prices are not increasing. The industry in general is in real stress.
Okay. So in your assessment, at least for the coming fiscal, do you think that maybe you could even slip into a profit for the entire, a loss for the entire year?
No, that will not happen. You see, there will be clear-cut distinction between good managed garden making good quality and good quantity also. And others are average. The average gardens might suffer, as you say. They might come into completely into loss, but good gardens will do quite well.
Okay, for yourself, would you want to leave us with some guidance for the full year?
As far as my company is concerned, even last year also we have done well. And this year also, I hope our quantity also will look up because of the development work taken up by us in last 5-6 years. And that will increase our quality profile too. And our teas are selling quite well. And I hope, export will support, especially that Sri Lankan teas are very high priced. And we make good orthodox. So a lot of orthodox will be exported and good, reasonable prices for orthodox. That's what I feel.
Are you looking to buy, some tea estates, etc., which McLeod Russell is planning to sell? Are you eyeing those assets?
Sir, thing is, according to me, the valuations, whatever, whomever has bought, he has bought with his own calculation. According to me, today, it is not the right time to buy at that rate. We will buy definitely, but I expect prices will further move down because whomever cannot manage will have to say, and margins are very much pressed today. So if you buy at 350 rupees a kilo, 40 rupees is your, 45 rupees is your burden on interest itself. To make that type of money today is not possible. So, yes, we would like to buy, but at our prices.
Okay. All right, Mr. Maheshwari, we're going to leave it on that note. Thanks very much for joining in. So that's the word coming in from Jayashree T. In fact, the stock has moved higher to the high point of the day, up around 8.5% for the Nifty, holding above 10,800. Take a break. But up next, more on the market stocks once we're back. Stay tuned. Welcome back. Well, that's the Nifty, Sensex, Nifty Bank and the mid-cap index. Largely, that's telling you that it's largely a consolidatory kind of session for us. So the Nifty is holding with gains of just about 12 points, but above that 10,800 mark. Remember that we had almost touched 10,900 on an intraday basis this week. Let's see whether we manage to get to those levels, at least probably in the second half or maybe next week. But nonetheless, just want to point out one drug, which is Alembic Pharmaceutical, so it should come up for you. The company has received an EIR, or an Establishment Inspection Report, for its Panila formulation facility, which was inspected all the way back in March of 2018, received 3 observations from the US FDA. So there was fear on the street that maybe it could have escalated to something further, but there were 2 approvals which came in last week. So now it just sort of cements the position that things are okay from that unit. But on that note, we're going to wrap up this edition of Trading Hours. Stay tuned to Halftime Report just after a short break.